we help our clients who are typically developers, private investors, funds, and things like that evaluate those kind of capital decisions. And whether it's a single unit owner, which is, or a private client with 1 to 10 properties, which is our typical bread and butter, or up the scale to funds that are doing 40, 50 deals across the country. I'm not a Phoenix expert. I'm not a Colorado expert, but when they speak to us, I think they get an honest truth of what we're seeing. And this business is still about information sharing and quality information sharing, because today there's a lot of information out there and you have to be able to kind of filter through it.
Hey everyone, thanks for listening to another episode of Buildings 2.0. Today I'm speaking with Darpan Patel, Senior Vice President of Investments at Marcus Millichap. Darpan, thanks for chatting with me today.
Thanks for having me.
Fascinating career, but take us back. Why buildings? Why real estate?
Why buildings? I think that's a great question. I started in my family's businesses, typically gas stations, liquor stores, convenience stores, and things like that. We were typically the tenant. So early on, just from the business side, I learned the operations, customer service, and sales. But flipping over to learning, hey, I have to extend an option on my lease or something like that. Yeah, I was relatively trying to be a translator for my family, right? And I gained experience through helping my uncles and other family members. So it was kind of innate in the DNA, and experience was already there. But I chose a little bit of a different pathway. I got a finance degree, mostly investments in banking. Wanted to be a stockbroker, really go back to New York. I was born and raised in Queens. I went to the Midwest with obviously my family for their business opportunities and growing up there, and went to the University of Cincinnati. And great program there on the real estate and the finance front. So when I got out of school, I was really, just hurting for a job. It was either go back to the gas station and, work the retail hours until I found something. And this was in the recession. I graduated with a finance degree in 2010. Really difficult to get a white collar job if you didn't have the resume, if you didn't have the connections and things like that. So through the gas station, I met who would be somebody that's a friend that just gave me a referral into a banking job. So I just dove right in mortgages, and I love the credit and helping people aspect of it and the numbers side of it. Then I found myself at a ceiling of where I could, go at that age in my career at about 23 years old. So I pulled the ripcord fairly quickly, 18 months in, and jumped into 100% commission investment sales position with Marcus and Millichap. I had a great mentor and a team at that point in time. And those first few years in the trenches, learning the business and working at the gas station, led me to building my own team and doing deals all over. But it really kind of goes back to being a tenant in a family business. And once I got into this world, I couldn't leave it. Every day, every street I drive down, I tell all my agents this, drive the market, go touch, see, and feel the bricks and sticks, because that's what we're really offering. Yes, there's income. Yes, there's potential, but are the bricks and sticks and the locations legitimate and of quality? And if not, some of our clients who are developers, it's how do they push that value? So that's really the next level of my personal business evolution into going ground up developments.
Keep us there for a moment. So what stands out to you, or a series of experiences dating back to the gas station days? I mean, you had the unique experience of being on the ground, feeling the pressures as a tenant. Does anything stand out to you?
I was just thinking about this week. There's so many skills that even in all retail positions, right? The variety of customers that you get to see on a regular basis, you're learning different people, different psychologies, different backgrounds and things like that. And if you can make the consumer happy in retail, I think that translates across the board in any business, right? We're always selling ourselves as a provider of a service, not just a platform, but the client has to be able to trust you, be able to work with you and come back. Right. A lot of our family businesses thrived off of the repeat. I'd probably say 60 to 70% of the customers in our business were repeat. And that's where you really are able to, raise your kids, pay your bills, expand into other opportunities. So you keep those people happy. Maybe life's not as easy or difficult at that point, right? The relationship is built and you have the ability to, in the retail world, upsell. But in our world, it's really create that trust factor. with our clients that they're making the right decision, because our average deal size, is 7 figures plus. So they're making real, big money decisions on a regular basis. And we're fortunate to have just rode out the last couple of years very successfully and transacting heavily in this marketplace. But coming out of it, we're very bullish across the board on a variety of retail sectors, if not almost all retail, excluding maybe office buildings, across the board for the next couple of years.
Talk to me about that. So, just a few years ago, folks were talking about the retail apocalypse, and now you're suggesting being bullish on retail. What's changed?
If you're waking up to it now and you're not, in the business per se and brokering these properties, a lot of clients we talk to are coming from different product types looking for retail exposure. The American economy is more of a retail-based economy. We're no longer, we haven't been for a long time, a manufacturing-based economy. So the all-time low vacancies, the rent growth that is stable. It's not like multifamily or maybe self-storage that you could get a double-digit clip in retail growth because your rents can be fixed for a longer amount of time. But I think that the demand from the tenants in the marketplace is so high, especially in the Sunbelt where I'm located, but even in the Midwest where you're seeing stable population growth, stable income growth. So, household formation drives retail growth. And in those markets, you can't get space fast enough, and you can't build it fast enough with, the permitting process, due diligence, site planning, government, and things like that. So you're 2 years out potentially from generating $1 of revenue. Where if you retrofit or adaptive reuses of existing facilities, that can speed up the process to gain that market share for our retailers.
Demystify for me the narrative here. So basic narrative has been for some time, Amazon is coming and sweeping up traditional retail. A lot of the mom and pop stores are kind of getting wiped out. Like, what is evolving, and what kinds of retail stepping in? Is it kind of big corporates? Is it small mom and pops? Is it diversity of stores? What are you seeing?
I think it's a little bit across the board. Now, I'm not saying there's no pain in the business either, right? So the retail apocalypse narrative to me, I feel like it started in like the 15 to 17 era and really kind of peaked through COVID, that we were all going industrial. We were all getting everything shipped to our house. And now we are getting a lot of different things shipped to our home. But take a look at Walmart, for example. They've had their challenges. They've closed down stores, they've retrofitted, et cetera, but the stock is at an all-time high. They're gaining market share across the board of the income spectrum. Why is that? They're able to use what, the terminology of omnichannel. They're warehousing stores, right? 200,000 square feet, 150,000 square foot super centers are their warehouses in your neighborhood. And they can get you product faster. So I think that is a great way for them to gain market share. And they have pricing power. So as a $500+ billion revenue company, they have the pricing power with their vendors. So they're beating the Dollar Generals and maybe the Family Dollars right now. But again, Dollar General is still expanding to the tune of 600 or 700 stores annually to get into different markets. When we look at some of the national, A-class players, you're looking at the TJ Maxx's, Home Goods, and Marshalls, which is all under the same umbrella. There's recently the Big Lots bankruptcy, right? That a lot of their spaces have been taken over by tenants trying to speed that timed revenue up and really step into those shoes. So Walgreens recently announced 1,200 stores that'll be closed, 800 near term, 1,200 over a 3-year span. So what's happening is that change of revenue and these tenants looking for profitable stores is leaving opportunity for potentially a redevelopment play on those corners, because a lot of them can be really strong real estate plays for the next user, but they have to make economic sense. You can't pay above and beyond market rent that maybe a drugstore was paying before and be profitable as a developer, but maybe you can be as an owner user if you retrofit it properly. So retail apocalypse, I think it was left behind a little bit for me with the malls. I think a lot of the dead mall concepts and things like that has been worked through in America. Not all of it, but we've seen the adaptive reuse to multifamily, medical, industrial, mixed use in a variety of projects. One of my partners just sold a mall earlier this year. The anchor tenants were all gone and they were retrofitted into a hospital. And that's a Midwest tertiary market mall. And those kind of things are happening in those markets still with high interest rates. right? We're still in an elevated interest rate market environment, which has really punished mostly the developers, right? That short-term construction debt is hard to come by. You have to put more money in. So that's kind of tempered the new construction growth, those costs and insurance and things like that. So people are looking at getting creative because they have a ton of demand still from high quality tenants.
You've got me thinking, has there been a change in the requirements from tenants in terms of like the physical space? You mentioned, for example, like the Big Lots bankruptcy. I suspect they're leaving behind what, probably 40, 50K spaces behind. New folks coming in, is there a change in what they're actually expecting in the physical footprint, either larger, smaller, slicing and dicing spaces? What I'm curious what you're saying.
Yeah, it's a variety based on each, retailer. Like Kohl's has blended in the Sephora brand, and I believe Ulta has rolled into certain stores and things like that to be a space occupant, right? But also a revenue and traffic generator. It allows that sublease scenario, like sometimes we've seen in the grocers where you have a Starbucks or a bank or a haircut place, that can help cover some overhead and things like that. But I think there's going to be a significant amount more give back of that space. And the backfill tenants, unless you're going with the bargain tenants that are the lowest rent payers on gross leases that don't really ask for much or tend to not ask for much and just take it as is, you're going to see the Class A tenants, if they're going to put in a build out like a TJ, right? And it can look very, very high end, even in a secondary or tertiary market, they're going to want something for it. And even as we get smaller down the scale, and what I mean by that is significant tenant improvement or free rent dollars, right? And there's a cost associated with redeveloping those or dropping a wall and HVACs and things like that. So yeah, materially, it's going to be on the CapEx portion of it. And then it's going to fluctuate based on how, discounted the rent is compared to market and things of that nature. But they will be very specific in certain markets where they have options. Right now, with the national vacancy rate so low, it's more about creativity to enter a market when a space is left behind. And sometimes they will have to pay a premium, right? To get into the right market, the right corner, the right location. And that's where there's a lot of people way smarter than me that make those, retail decisions at that level. We get to consult on the site specifics, right? What can the CapEx level be? What should market rents be? What can the financing opportunities here allow? Will there be TI financing? Will there be a lease that gets into place and we can do a cash out refi with a little construction aspect? So we help our clients who are typically developers, private investors, funds, and things like that evaluate those kind of capital decisions. And whether it's a single unit owner, which is, or a private client with 1 to 10 properties, which is our typical bread and butter, or up the scale to funds that are doing 40, 50 deals across the country. I'm not a Phoenix expert. I'm not a Colorado expert, but when they speak to us, I think they get an honest truth of what we're seeing. And this business is still about information sharing and quality information sharing, because today there's a lot of information out there and you have to be able to kind of filter through it.
What's your day to day look like? So often I have to imagine you're connecting dots between different stakeholders. Who are you talking to, and like what's keeping you busy on a typical day?
My main 3 stakeholders, my family, and I got 2 kids under 5, and that's a big part of my life and my why in this business and where I come from. It continues to drive me, right? So in the mornings, I find some peace and quiet because I'm up before the sun, and I learned that after having kids. I wish I would have done that a lot sooner. But the early mornings are my peace and quiet. I get to get some admin work done, start the day properly, get to see them, take them to school on a schedule. So that's important to me. And when we're in the office, it's go time, right? So we have 15 agents sitting in this office, several senior agents on my team, a lot of newer agents that are finding success. So it's being available for my clients primarily on the phones in the morning, handling, deals moving forward. DMF is how we refer to it. And then getting everybody on the phones, right? Or out into the street for our meetings. So that's really still to this day, the front end is what really drives me. For a while there, I switched to, this is our next closing, et cetera. And there's some joy found in that and a lot of relief, but it's really, who am I going to meet next? I've met so many incredible people in this business, and not just from the client perspective. We have so many teammates across the country through our marketing, our connections, our deals, LinkedIn, things like that, that really have helped us grow this business and provide a wide variety of services that when I started selling single tenant net lease in the Midwest, little properties, and I never expected. So I'm really, enjoying where we're at, but finding ways to push that envelope to find more hours in the day, get more meetings. So this year, multiple times we've set the challenge, right? 90 days, 90 meetings, 100 days, 100 people, things like that. And it's really been exciting to be back out. We've had some issues with the storms recently, and it's been really tough on the market here locally. So being, not the broker that's in the market to go, snake a deal, we're really trying to help them through some insurance process, some CapEx, some vendors, whatever we can, which is something that we took really high advantage of during COVID when we didn't think we could transact in that environment. We went to some different fundamentals. So always looking to try to find ways within the day to improve our team, improve myself, meet new people. But yeah, the big business making hours during the daytime is going to be front end, right? New meetings, new clients, and managing our deals.
You mentioned DMF, always moving forward. What are the most common reasons why a deal might die?
We're taking daggers from everywhere at this stage, right? And right now, I think the most important thing is that buyers have options. Where over the few years before that, their inventory was kind of light, still competition. But right now, inventory is higher than it's been in a long time. And I think that's giving buyers options. So if you do secure a 1031, it's not always a done deal. They have 3 options they can buy. They'll vet them all out. Our job is to convey transparency on the front end. My goal is high probability transactions. So there's not a bunch of downtime between seller and buyer and seller and next buyer. There's not a lot of cost that's sunk into it from a legal perspective, escrow, inspections, and things like that. So we try to help our buyers that are coming to the table, along with their brokers, transparently do due diligence up front. I find it pointless that if you're unable to do due diligence up front, you can't help solve the problems from the perspective of that buyer. And each buyer has a different perspective. So being in tune to that a little psychologically, I don't think there's a metric for that. I think it's just how you operate and you provide information consistently, transparently, concise information to the marketplace. Then driving that competition. If you can't create competition of multiple bids, you're going to find that someone else has the leverage. And it depends on which side you sit on, right? I've said this before. If I'm representing a buyer, I'm totally hunting an off-market deal. I don't want competition for it. I want my client to get the lowest price possible. If I am a seller, which I'm a property owner, if I were to sell something, I want a bidding war. And that's why you hire a competent agent, a competent firm to provide you that you haven't left any money on the table. So that's our process and our approach to not letting deals die. But why do deals die? Can be a variety of reasons. Title issues can come up, environmental issues that were not exposed on the front end, inspection issues all the time, pre and post, right? Buyer might have gotten their eyes on the property, but buyer's not a roofer. Buyer's not the parking lot guy. When they get the inspection in and it's $50,000 for a parking lot timeline over 5 years, but we don't have anything near term, my job is to, uncover the issue, mitigate it as much as possible. But really, if there is something real, it has to be addressed. And that I don't always find that it's a money issue with most clients, right? And that's what I try to teach. It's not really a money issue. It's, was it explained properly? Was it handled properly? Right? Was it exposed on the front end? Was this something that should have been known? And I believe that if you do hire, an advisor for yourself, they should be able to do that job for you to mitigate the deals falling apart.
Talk to me about the framework of due diligence. There's the financing, there's the bricks and sticks, right? And there's the expectations of clients. I mean, how do you think about due diligence in a kind of an organized manner? If I'm coming at you with certain criteria, what should I know going into it?
Primarily, we start with the financials, right? With any asset, it's primarily the financials. Do they fit a certain box for the client? If you tell me I'm looking for value add and you're telling me I want a certain price per foot, but I send you brand new construction with a long-term lease on it, the only real thing that's happening is I'm not listening to you. And we won't have a long-term relationship at that point anyway, because I'm not doing my job, right? But there's also a certain set of clients that say, send me a great deal. I don't know what that means. I know what a great deal for me looks like, in certain instances, but I don't know what a great deal for that specific client looks like, right? So we start with, if it's a buy side assignment, we'll start with a broad range of understanding their criteria, try to show them some deal flow, and understand the reciprocation of that communication, right? I need to know feedback if I'm going to visually see it through your eyes and what your risk tolerance is and things like that. So, like Fidelity will make you fill out that form. Are you conservative? Are you not? Ours is a little bit more ambiguous, and real estate can tend to be more in the eye of the beholder more than, stock market business or other investment opportunities. So our job to explain what the current opportunity is based on the financials, and then what the future opportunity could be, what the risk profile is, right? So we look into a lot of that from a surface level. And I can tell you with the amount of experience that myself and my team have, we can conduct that in very quick steps from a few checklist items. Corner, rent to market, lease term, credit worthiness of the tenancy. And then we go deeper into market specifics, right? What's going on there? Are they losing a big employer or not? So there's, 100-point checklists that we can go through to identify that front end due diligence. And a lot of it's before we even sign an offer. And that's done very front end. And then when we're going into it, you're spacing the timelines out. I'm under agreement on several deals that have just had 10-day looks, right? 10-day due diligence periods. We're able to secure title, survey, phase one inspections within 7 days. And that's not normal in our business. We have found a lot of great vendors that when they know we're running a deal, we can get some higher priority. And we've proven that out every time we give quotes to our clients. We're showing them the timelines, right? To see how quickly that they can understand the deal and what the costs are to them. And that we will have professional third-party reports, hopefully verifying our assumptions from the front end, right? We can't prevent a title issue. We can't prevent a lien issue, but we know how to work through some of that.
Is there criteria that you're finding clients are looking for today that perhaps was not necessarily the case even 2, 3, 5 years ago? Are things changed, whether environmental or otherwise? Are there things that are popping up that are new criteria for you?
I wouldn't say new. I would say for a while there, we lost some of that criteria because of low interest rates. If I could buy something at a 6% cap rate and finance it at 2.75, I'm making a massive leverage cash flow in comparison to what it really should be. And today, that same number is 6.5% on the cap rate and 6.25%, 6.5%, sometimes 7% on the interest rate. That yield is below your bank account. That's the big, massive shift. So what that has led to the buyer pool is that I've said this before, the smart buyers are here. The smart buyers have been buying for at least 18 months. And we're finding that on a regular basis. And that's where our due diligence on the front end matters the most. They're asking all the questions. So what are the questions? A lot more related to specific construction aspects, right? The aesthetics of the building don't matter as much as the bones of the building. How's the roof? How's the HVAC? What are my expenses pending? And we have a lot of real-time estimates because we're doing this every day, right? We can have bids in 5 different regions with multiple different vendors. And I think that's a big value add that, maybe some brokerage teams aren't paying attention to. I think it's a massive client service aspect with very little benefit to us except for the deal moving forward. But these vendors are a big necessity right now to ensure we're getting the right bids and the costs, right? So CapEx is one major issue that was overlooked a little bit in 2021 and early 22. Environmental is an absolute must. And a lot of people are even getting new environmentals on new construction development just to make sure they're protected and nothing changed between the land and the C of O, right? Title, I would say that maybe not the clients are as focused on title, but we work with a lot of great attorneys that protect them from that aspect. You don't want an easement issue coming up. I don't pretend to be an attorney for a TV show or anything. I did not, go through law school, nor do I want to. But we have a lot of good friends and attorneys that are deal makers looking out for the client's benefit versus the billable hour. And that really helps with that entire due diligence process. I can say the lease says something. The attorney confirms that the lease says something. So those are 2 big wins for our clients that work with us.
Have you found at all that the business of brokerage has evolved? Meaning, from a transaction heavy environment to more of an advisory role. What are the most exciting evolutions in the business model itself that you've seen or perhaps that you get most excited about?
I'm glad that you bring up the evolution because I think it's a couple different aspects from brokerage specifically. Everyone talks about technology as one aspect of it. For me, I think it's leveraging the technology to make an efficient team, efficient process to create scale, right? I wouldn't be in this business if I didn't want scale. And the same part of my growing up, a lot of people around me focus on scale and building businesses from scratch. And I thought that was very cool. And I think that maybe getting an education sometimes and going into the corporate world kind of stymies some of that entrepreneurship. So I think the technology in our business, I think the advisory side of our business kind of brings that out of me, that I can be creative and provide different, perspective to our business. But back to the question, the evolution really is it's evolved from a single, broker business where you're advising a handful of clients and doing a lot of deals yourself, to, for me at least, and what I've seen is a lot more team-based. You can service a lot bigger client base, and it's about timing. We have the ability, I say 24/7, I like not to work my crew 24/7, but our business requires us to be available for our clients. And growing up in something that was open at 5 a.m. and closed at midnight, those are business hours for me. That's how we've approached it from that perspective. So team is a big evolution, but we were always coached as agents that come into this business to focus, be advisors first. And early on, when you're trying to get that paycheck, you're trying to get from 0 to 100, it's very difficult to focus on the client's mission. You don't know what some 40, 50-year-old millionaire benefits from as a 24-year-old trying to provide advisory skills. So you really have to grow that. Our firm does a great job of focusing on advisory, but I think there's a lot of resources out there for agents or any salespeople in general to learn from YouTube, right? A lot of the education aspect of our business is no longer in a book. It's no longer in a classroom, right? It's at networking events, it's at YouTube, it's podcasts and things like that. So seek out information. And I think that all of it being at our fingertips, sometimes a double-edged sword, but it's easier to be smarter in this business if you look around and leverage the tools.
Does a piece of technology stand out to you? You do have the benefit of now, decade or two in this space. What are you using today that maybe when you started just wasn't even available, that perhaps is a game changer for you now?
It's a dangerous tool, right? I have been able to close deals from around the world, and that was a side goal, right? To be free. And I started in net lease mostly to be able to work deals across the country. And it grew me multiple ways, different personalities, brokers, clients, and deals that we got to work within kind of helped us do that. Now, with the system that we have in place, technology is how it's evolved. 6 p.m. in Italy is noon here, and I can take a call, I can send an email, a DocuSign, whatever the tools are. Our firm helps provide, and a lot of the tool providers are making it available on your cell phone, right? So for me, the best tool specifically I feel like it would be this until they chip me, and I hope we don't go to that, but that would be the only difference of how it integrates with me as a broker any different, right? We say this all the time, that the brokerage business is your personality, right? You gravitate the people that will, want to work with you first, and then the rest of the stuff comes into play. So for me, we've used certain AI things. We're very involved with GPT in marketing and things like that. So I think that will evolve more over the next couple of years and create more efficiencies, but it's still a people business. I have to be available on the phone. I have to be available in person. So those two things I think are at the forefront.
We've talked about what's changed and the evolving business models and technology. I'm curious, in 10 years from now, what's likely not going to change about your space? What's timeless? What's regardless of the technology, regardless of where AI goes, what's likely to be true 10, maybe even 20 years from now?
I think on the retail front, we will still go into stores for certain things. The evolution of that might be more experiential. Think Apple Store versus maybe, Kohl's in general. Not to pick on that, but it's something that requires some attention, right? I think that it requires personal customer service rather than picking out a shirt. That part of it, I don't think will change dramatically. I think it will evolve with maybe it's holograms. I don't know. Maybe it's digitization of, like, as soon as you walk in, they know your profile. These things are happening, right? And they can sell you on that product or service at that time, or maybe even diagnose the problem as your car is pulling up, right? Some integration of cell phone data and in-store because you're a rewards holder or something like that. I think that from an industrial perspective, there will still be big boxes with packaging that comes to your home or your store. So I think some of those things, the internals of that might be more robotics, might be more, manufactured from that perspective. But I think the day-to-day of it will still be a big box, needs a lot of space to hold a lot of stuff so it can get to the consumer faster. And that's a societal thing, I believe, that we will continue to trend towards, that it's still in an instant. I want things faster, less friction in the consumer experience.
One of the questions that I have, shifting from retail and industrial, is housing, and specifically affordable housing. In your view, why can't we just step up to the plate when it comes to housing? I mean, it seems like we're slow to the game. You mentioned earlier, new construction is kind of slowed in general. Why do you think that is?
I think it's a very simple answer. I think there's a lot of layers of legality to it that stymies the process. And it's not just affordable. Being a developer and a builder in any environment along my career has been difficult, right? Recession, I guess, for a lot of it was recession till 14, and then rates were dropping. And then it was rates increasing going into 19, and then COVID. So if you're a developer in the last 15 years, props to you, right? The amount of risk that they have taken for the reward, yeah, sure, it's great, but the amount of risk that goes into it, keeps me happy being the broker. And I tell my clients this all the time. I'm very, respectful of the type of risk and reward scenarios that they take, and then they hire us to help them achieve that exit. Right? We're essentially delivering that bottom line pro forma from when they identify that piece of land as an opportunity. So I think that side of it, if we can somehow make more efficient, I think the city of St. Petersburg has done a great job of it. And I think they'll continue to, but other places need to incorporate some aspects of that leadership amongst the city side of it, right? And we've had several projects where I can speak on the program that the state came out with, Live Local Act, that was supposed to provide funding. It was supposed to provide incentives to make these projects happen, convert certain sites into multifamily for development. And because of the process can stymie out because there's so many little checkpoints, right? Is this 8.75 square feet away from this? I think technology might help us eliminate that friction. And what I'm referring to is maybe blockchain title and contracts and things like that make things efficient in the permitting process as well. I think that could help streamline it. But to me, it's government out of it with proper funding, right? If we're going to spend tax dollars related to it, it shouldn't be 600,000 or 700,000 per unit. I think that's a lot of inflated costs that cannot make things work without even more incentives on the back end, like TIFs and things like that. So they can figure out programs that are simpler. I think we can have a lot more opportunity with that.
To role play for a little bit, you're a mayor, and you had three kind of levers to pull. You mentioned a few things already, kind of permitting. What if you could snap your fingers? What would you change?
I would resign immediately if I had to be in politics. So that's my thing on that. But I think from speaking from a business perspective and the people that we speak with, the timelines, right? I believe that the government side of it is understaffed. I really do. And post-COVID, it is understaffed in a lot of markets, but the growth markets, especially because there's so much going on, right? Do we need 15 new car washes in a certain marketplace? I don't believe that, but they're getting approved and they're going up, every year. And I get it. Housing's different, right? But it's more important. So focusing on things of that nature, that produces all of the benefit in those markets on the other stuff. And that's what I alluded to earlier. Household formation drives all of the other growth, right? We're living there, we're working there, we're shopping there, and spending our money there, right? So I think affordable or market has, and some of that has gotten some connotations related to it and things like that. And I believe it's because of how long it takes. I believe it's because of some of the projects that have been completed. So there needs to be a little bit of shift on that. But I think you have to work public, private, and you have to bring in, a lot of stakeholders. I think that's where, if we're able to remove some of the layers related to permitting and approval process, the stakeholders can get behind, more and more projects going up. But I also understand, if it's your neighborhood, do you want a high rise going in on that street and things like that? I can understand both sides of it. So it's a very tough place. It's not an easy solution. Everybody's trying it all over the country.
Darpan, this has been extremely fun. Extremely fun. For folks that want to follow you, whether you, your team's work, where can they find you?
We're primarily active on LinkedIn. We found, a lot of friends and advocates in that business side of it and posting. So Darpan Patel, you can search me on LinkedIn and follow our pages there and things like that.
Darpan, thanks for your time.
Jose, I appreciate it. Thank you so much for having me.